Alright, today let's use the 7 criteria Warren Buffett's mentor Benjamin Graham listed in his famous book The Intelligent Investor to look at the company Daqin Railway. First criterion is adequate size. Daqin Railway's market capital is 130 billion Chinese yuan, ranked number 2 in the industry. Its annual revenue is 80 billion Chinese yuan. It's sufficiently adequate. Second criterion is strong financial condition. Daqin Railway's current assets is 4.2 times current liabilities, greater than 2 times Benjamin required, and its net working capital is 2.27 times of its long-term liabilities, also satisfies Benjamin's requirement. Number 3 is earnings stability. So Daqin Railway has achieved 21 consecutive years of positive earnings, greater than the 10 years required by Benjamin. And the fourth criterion is dividend record. Daqin Railway paid out dividends for 19 consecutive years. It's less than the 20 years required by Benjamin, but given that the Chinese stock market has a much shorter history than the US stock market, where Benjamin derived his criteria from, so I'm lowering this requirement to 10 years. Daqin Railway also satisfies that requirement. Number 5 is earnings growth. For the past 10 years, if we compare the 3 years in the end to the 3 years in the beginning, the average earnings increase only by 3.8%, much less than the 1/3 or 33.3% required by Benjamin. Number 6 is moderate price to earnings ratio. Daqin Railway's current price divided by past 3 years average earnings is 11.4, less than 15 required by Benjamin. So this one is also good. Number 7 is moderate price to assets. Daqin Railway's current price to book value is 0.8, less than 1.5 required by Benjamin. So except earnings growth, Daqin Railway satisfies all 6 other criteria. Now let's look at intrinsic value. From the 2024 semi-annual report, I calculated Daqin Railway's liquidation value is 74.3 billion Chinese yuan. If we assume Daqin Railway can sustain 5% of annual growth, its dividend sum of next 10 years will be 101.7 billion Chinese yuan, giving us intrinsic value of 8.74 per share. If we assume no growth, the next 10 years dividend sum will be 62.5 billion Chinese yuan, giving us intrinsic value of 6.79 yuan per share. If we assume earnings decline by 2% every year, then the next 10 years dividend sum will be 12.5 billion Chinese yuan. That gives us intrinsic value of 4.31 yuan per share. I think it will be hard for Daqin Railway to achieve any kind of high growth rate. Assuming no growth or declining growth will be more realistic. So I estimate intrinsic value of 6 yuan per share. What do you guys think about this analysis? Please leave a comment if you have any questions. Stay tuned.